We've just told every country in Africa, South America, Southeastern Asia, don't bother getting close to the United States because they'll just stab you in the back. Right? On average, when we've broken down tariffs in the past, you're looking at anywhere from a 1x to 3.5x the tariff percent as the actual sticker shock that you experience on the raised price of items. Now, the problem that we have in applying that analysis, we've never seen tariffs this broad in a modern economy. If these tariffs stick around, we have a long way to go. That would be utterly devastating to the global economy. You're talking dot-com boom bust kind of cycle levels of pain. Then they'll just be like, "Oh, you're a professor. You must be some woke liberal, and this is all a lie." And I'm like, "Okay, cool. That's where we're at." Right.
We have very different viewpoints on many things.
But a lot of these issues are American issues. They're not Republican or Democrat issues.
Welcome back to Elevated Thoughts, the podcast that's working to restore productive discourse between left and right. I'm your host, Cooper Simmons, and I'm joined as always by my co-host, Mike Marrow. Today we have the honor of being joined by somewhat of an ex-celebrity, if I dare say, Mr. Adam Cochran, who's an outspoken economic expert and online personality that personally, Adam, you're my go-to source for when I need to figure out what's going on, economically speaking. So thank you so much for joining us. How are you?
Yeah, pleasure to be here. I'm good. Tired. It's been a chaotic week, and for your listeners, we're recording this pretty late on Sunday night as the market is still unfolding in chaos. So I'm sure I'll be more exhausted, more tired as we go.
Right.
Well, I reached out to you just, I think, on Friday, and we kind of put this together as a last minute thing. So really, really grateful for your time. I really, like I said, appreciate you because you do give a pretty sobering analysis of what we're seeing. And right now, specifically on X, which is my main consumption source, it doesn't make sense to me. Right. What we're hearing left and right, specifically from MAGA is, well, they've been charging us, so we got to start charging them too with these tariffs. And I'm, as the Trump supporter and the right wing, I'm wearing my Reagan sweatshirt today, right, on this show. It's become increasingly hard week over week to defend these actions, whether it's been Musk and USAID. Adam, actually, we shared your awesome breakdown of the Iraqi Sesame Street on one of our shows,
Right.
because it was such a crazy thing to think, we got to cut DEI. It was like, well, DEI, when the country doesn't look like ours, might mean hiring white people, everybody. So anyway, there's been so much going on in the world of tariffs. We had to bring you on. But first, before we get started, why don't you tell us a little bit about yourself, just some of your background, maybe credentials, so our viewers know they can trust you. Um,
Well, let me start off with that. Don't trust anyone on the internet. Do some actual research and learning, please. We need more of that.
sure.
For my background related to this, I'm an adjunct professor in business analysis, so I spend a lot of time using data analysis to look at things like supply chains and what are we going to have the impacts of on tariffs and things like that. I've also been an investor both in private and public markets for more than a decade now. Um, and I spend a lot of time doing deep analysis to understand how the actual underlying business is going to be impacted. What are its margins going to change? How are things going to change for the customer and the consumer? Because that's the only edge that you can have these days when the markets are filled with massive trade firms that have every expertise under the sun. So that's kind of where my focus has been.
Very interesting. So obviously what we've seen in the last couple days has been the announcement of what they're calling, or the Trump administration is calling, reciprocal tariffs. And famously, he came out with this big poster board that showed all of the different numbers. And as time went on, we learned, well, these weren't even tariff rates that they were showing. So can you tell us a little bit about what we were actually seeing and why that was chosen to be shown, or maybe why it shouldn't have been chosen?
Yeah, so I think the finance world is still trying to digest um, what they were going for and how we got to that chart. Because there's a lot of debate on if the equation that they have suggested was used was even done accurately. There's some great posts out there by some economists and some mathematicians that are saying, hey, the explainer we've been given would be still weird to use, but it would be accurate if these numbers were one fourth of what they are. And so we're kind of concerned that maybe you got some variables mixed up in applying these. The numbers aren't tariffs and they aren't related to the amounts that these countries are charging us. They are some sort of calculation based on the trade deficit. And I think that is just the understanding of the trade deficits and trade balances in general um, become one of the core logical fallacies that are underpinning all of the problems that we're facing in this discussion.
I'm glad you brought that up because I think that's a great place to start. Because when people hear deficit, they might start thinking about like a budget deficit, a revenue shortfall, and those are problematic long term or accruing a lot of debt. But a trade deficit is not exactly a negative thing, especially in the context of the U.S. And maybe you can unwrap that a little bit for our viewers.
Yeah, so when we look at trade balances, we have positive and negative numbers to track the flow of goods, but we shouldn't think about it as a debt that's being owed because what it really represents is the different mixes of production and consumption in each country. So the example that I try and fall back to is a grocery store. If you go and spend $100 in a grocery store, you get $100 worth of groceries. Your trade balance there is negative $100, but you're not getting ripped off. You're shopping, right?
Right, right.
The same thing is going for the US here. We are buying raw materials from countries to manufacture in the United States. And we're buying goods that are manufactured from overseas in industries that we don't want to maintain, that we can't be competitive in, or just to meet the really high level of consumption that we have in the most consumption per consumer capita in the world, and in a very knowledge based economy. We want that knowledge based economy with that high income, that high expendable capital, and the ability to consume. And so we have to have sources to supply that. And so that's where we begin to see the trade deficit pop up, and that'll be expressed as negative numbers. But it's not a negative thing for the United States. We've seen 20x economic growth over the time that our deficits have expanded with these countries. So I think there's this real misunderstanding that a deficit has to be a negative rather than a direction of flow.
Right, because we've now seen over the last couple days, right? Zimbabwe and Cambodia have come to the table where they're going to address the reciprocal tariffs. But aren't we in the end? And honestly asking, aren't we actually hurting that country more because we're kind of destabilizing their very small revenue
Yeah,
stream? We
absolutely. And I think when you look at the countries who have come to the table, first off, it's a fallacy, this idea that we don't charge tariffs to these countries. Vietnam is a great example. They're at the negotiating table. We actually have always had a larger tariff on Vietnam than Vietnam has had on any US product. And we put it on their main US export, which is t shirts and sportswear. Which we sell them the cotton for them to make these T-shirts, and then we tariff it at 16.5 to 32%. Um, they don't actually do that much trade outside of those items with the United States. And so they're doing this calculation of the crazy tariffs we slapped on them. And they're saying, hey, if we have to eat, tens of millions of dollars in domestic difference, that's probably worth still not having our t-shirts hit this hard. So these countries that have really small tariffs or really small trade balance deficits with the United States and are fragile labor economies, often in the developing world or emerging market, of course they're going to come to the table, right? And I think one of the biggest hopes here is that Trump gets a moment to parade those around as a victory and maybe walk back some of this rhetoric on larger trade countries.
yeah. So is that likely what we're looking at, right? In your opinion, if I were to ask you to steelman the Trump position, right? To say, all right, I finally finished Peter Navarro's 2011 book. I know everything about reciprocal tariffs. I'm basically an expert. Is the goal here to redo Art of the Deal and to pull these tariffs back eventually when he quote unquote balances the playing field,
You
or is
know,
that
I,
also ridiculous?
Maybe. I think the problem that I have with that is when we try and evaluate the ability of these countries to come to the table and make a deal, and for just the faith in the US credit system and the US trade system to continue, the amount of damage that will be lasting, even if these tariffs roll back, is significant. But these countries have no incentive to put forth the best deal because they don't know that Trump is going to turn around a week later and start this back up again. The impulsive and volatile nature of our policymaking this term has been detrimental to our deal making. And I don't think you can expect that the Trump administration is going to get great deals because partners have no confidence that that deal will be what lasts tomorrow. And that's a key part of deal making. You have to be able to walk away from that table knowing that that deal is now ironclad. And without that, I think it's a bit of misguided faith to say, hey, this is that 4D chess where these are a bullying tactic. We're going to get them in place. We're going to get the better deal.
So we've had a few guests on, especially concerning around the topic of China, whether we see them as the adversary of the United States, but also as just the counterpoint to the U.S. influence around the world. So there's the U.S. economy and the goods and services that they provide, but then there's also another market that they can turn to, and it's hard to quantify what I see as erasing decades worth of goodwill and replacing it for transactional style deal making, but we can quantify it in certain ways that the markets are responding. So, two things. How do a lot of these countries that used to see the United States as a trustworthy partner in this, trade policy making, and now how do they look at that versus the stability of, say, Xi Jinping? Right, the United States has fluctuating presidencies with different policies, and the most recent one, most chaotic. The Chinese offer some stability there. What does this do for also influences like the economic structure, BRICS, and those alternative options to the U.S. dollar?
I think when we begin to look at U.S. influence, both through removing USAID and that soft power influence, but also just the fiscal stability, it is a very stark moment. We see it throughout developing Africa, all these trade deals that are going to Chinese companies for development rather than to the US. But we're starting to see little glimmers of it as this chaos unfolds, where we're seeing Swiss treasuries have negative yields again for the first time in many years. And they're seeing a much bigger buying push than US treasuries and then gold. So capital is looking for other safe havens. We're seeing the yen react as a safe haven here.
Hmm. Hmm.
Um, and I think a great example of this in Southeast Asia comes back to Vietnam again. We were trying to diversify away from Chinese manufacturing. The US and many companies in the US did a lot of investment in Vietnam, along with the Vietnamese government, to build up factories, shipping, logistics, so that we could diversify across Southeast Asia. Now we've turned around and hit them with a massive tariff, and brought them to the negotiating table and said, hey, drop your tariffs, which is mostly on soybeans because we have a bad history of dumping them on Vietnamese farmers when China doesn't buy our surplus.
Right.
And so we're saying, make yourself vulnerable to us after you've gone up to bat against your own neighbor in their sphere of influence to try and become closer to the United States. We've just told every country in Africa, South America, Southeastern Asia, don't bother getting close to the United States because they'll just stab you in the back.
Right.
Right? Go look for other trade partners because it's not worth taking any risk going out on any ledge to build that relationship with the US. Because we'll just turn around and try and squeeze blood from a stone. And that is a horrible thing that sets us back for 20, 30 years, maybe even multiple generations, that doesn't go away if these tariffs get rolled back tomorrow.
Mm.
Maybe we could juxtapose how tariffs were used historically, because I think the part of this, and you just touched on it there, is if there was a method to this madness, as I would say it, that these tariffs are serving a purpose and we're trying to, bring back certain industries, the manner in which of rolling them out, rolling them back, rolling them out, rolling them back is not typical. Historically, that's not how we used them before. So maybe you could give our viewers a little insight into how they've been used in the past.
Yeah, and I mean, I'll give a shameless plug here for the YouTube channel Adam on Finance,
Of
where I've
course.
got videos breaking down all of these tariff questions, including one dedicated to looking at why did we have these blanket tariffs in the 17, 18, and early 1900s. I think there are a few things we have to understand. That first, the makeup of what we consumed back then was very different, but also the kind of jobs we wanted in America were very different.
Right.
Um, Most Americans were happy with their manufacturing job or agriculture job. They got to put food on the table, provide for their family. It was good, but there wasn't an abundance. There wasn't extra spend. And apart from a few very wealthy people, there wasn't this high income bracket that we see today. Um, this was a very different version of the American dream than what people aspire to today. And I think if you told 50% of Americans you're going to go work a 19-hour, $19 an hour job at a factory, and that will be your income, I think they'd be pretty dissatisfied with that lot in life,
Right.
both in what they got out of it and what they were able to afford. Um, so the reality is that we have to use these tariffs in targeted ways that make sense for industries where we do want to actually have those jobs. There's this misguided notion that bringing back all manufacturing to America is good. I don't think we want to have any Americans working for, pennies an hour on an assembly line making T-shirts, right? That's not the kind of labor we want to support, and it's actually going to be more costly for us. And I
Right.
think that's massively overlooked as well. When we have jobs that are below the median income and median labor
Hmm.
standard of what we currently have in America,
Hmm.
that means our cost of social programs goes
Right.
up dramatically. And that has second order effects where we see the amount we have to spend on crime prevention and judicial systems and, funding jails goes up as well because crime goes up because we've created more economic dependency. And so there's this fallacious idea that we just have to get these hourly paying jobs at, $10, $12, $15 an hour and everything will be okay. The reality is we would be much better off if that job paid $30 an hour. We as a society collectively would spend less on
Hmm.
that, even though it's much higher. But the appetite for baking that into the product margin isn't going to be there. So the reason that we don't have blanket tariffs anymore is because it's not the 1800s.
Hmm.
The mix of jobs in America, the mix of consumption in America, and overall, the aspirations of what we want as consumers in society is dramatically different. And that's okay, but we have to have different plans to realize that economically.
I'm s-
That's the other thing we see all the time online is everyone coming back and say, "Well, we need to consume less. This is a good thing." And I think it's just totally misunderstanding what the future
Yeah.
looks
And
like.
I
It's
mean,
kind of
great. Let's consume less. Let's do that. But how many
yeah,
Americans actually want to change their lifestyle today? How many people are on
no.
TikTok saying, I'm getting rid of things rather than I bought the latest cool gadget?
sure.
It's not the reality. And we need to be okay with the disconnect of there is something that we should aspire for, which is less consumerism and owning less stuff. And there's something we want. And there's a spread there. And that's okay to recognize that humanity because understanding the human component of economics is one of the most overlooked things. We are not math variables. We can't just say, we'll all consume 20% less. If we
Yeah.
consume 20% less tomorrow, there will be pitchforks everywhere. It's a problem.
Yeah, I think people misunderstand that, and also, this isn't the first "Made in America" or "Buy American" campaign, and everybody says that until they look at the receipt and they say, "Oh, okay, time to, choose the cheaper goods," and stuff like that.
Yeah, I mean, there's some amazing analysis that's been done on certain products, and one that I really like is that the latest smartphone, if everything from your R&D right up to every component of labor was done in America, the latest iPhone would cost north of $10,000,
That's
right?
right.
That's astonishing, and no one wants to pay that.
Not to mention we don't get the materials here anyway, so it's
Yeah.
not even
I
possible.
I
Yeah.
think
Oh,
that I think
don't get me started on the idea that of people being like, "Oh, well, we'll just get raw materials ourselves." Great, you can't change where cobalt and lithium are.
That's
Yeah.
actually exactly where I do wanna wade into,
Okay,
unfortunately.
great.
The devil's in the details here, and I think it's important to let, folks understand that the supply chains when tariffs were perhaps a, more efficient tool
Mhm.
has changed dramatically. Supply chains are much more integrated, and I think, you did one of your recent posts in your thread there was talking about how a 5% tariff is not just a net 5% increase. You're talking about sometimes parts that move across a border a couple times, etc. And when something is made in America, it's not always truly made in America. Isn't that right?
Right, and I think this is actually one of the things that even a lot of even a lot of financiers and financial influencers who don't deal with the supply chain side of a business, oversimplify. So if you asked a financier what the cost breakdown on a sandwich was, and if steel tariffs would impact a sandwich, they would tell you, of course not, right? There's no steel in a sandwich. But the reality is that the sandwich shop contains steel. The knife probably contains steel. The bread was probably cut at a factory with steel, moved on a steel truck, right?
Hmm.
All of these components in your entire supply chain are have to be factored into the margin cost of operating that business. So even if we don't move across borders multiple times, if there is that one component somewhere in your supply chain, you get hit. So if we have a 5% tariff on steel, your sandwich might go up 10% in cost. And you'll be flummoxed because there's no steel in a sandwich. But it is all those components throughout a supply chain. On average, when we've broken down tariffs in the past, you're looking at anywhere from a 1x to 3.5x the tariff percent as the actual sticker shock that you experience on the raised price of items. Now, the problem that we have in applying that analysis, we've never seen tariffs this broad in a modern economy. You know, your iPhone might source parts from 40 different countries. We don't know what all their factories and supply chains look like. We can't factor that in when we're talking about just so many different components. Um, so the reality is here, we don't know if that math will continue to hold out or if it will be exponentially higher until we start to get to this earnings season and have companies tell us about how their margins and supply chains are being impacted. But it's likely that a 5% tariff could mean a 15% price spike on things that you don't even think contain that item.
That's interesting to me because I would have thought, okay, let's just take something simple. The t-shirt cost goes up 30% of the cost of goods, but the overhead doesn't necessarily increase. But I guess, right, the materials to distribute it and all of this, and I guess the person's lifestyle that's running the warehouse on the other side, their
Right, and
cost of
I
living
I
is
I
gonna.
think one thing that people forget when we talk about margin is that, overhead also includes this wear and tear calculation, right?
Mhm.
Like, at some point, I need a new truck, at some point, I need a new table, at some point, I need a new factory, and so if you have steel components there, you might say, "Hey, the structure that we build in, was already built, and so our overhead shouldn't change." But every single shirt has some fractional percent of that margin that's allocated to future wear and tear, right?
Mhm, mhm,
Um, Now, a lot of smaller companies don't really manage their overhead to that minute level. And it's why some big corporations are so much better at their margin pricing because they understand every single cost that goes into it. So you might find some businesses have 1 or 2 years where they've put up their prices 5% because the tariffs were 5%. And then they go out of business because they actually weren't capturing the real change of cost to their operations as well.
mhm,
So it can be very tricky for us to understand because it's also different in every single sector. Electronic sectors, which have so many advanced components from so many locations, so many different minerals coming out of the ground from around the world, those tend to have a much higher multiple. Something simple, you know, textiles is often on that lower end. I think I'm pulling it off the top of my head here. I think it's in the low one point something X of a
mhm.
multiplier because it's a much simpler supply chain and
Right.
usually can be made in a much simpler factory. But also, a lot of overseas manufacturing in developing nations don't track their actual margin cost down to the minutia of things like wear and tear as well,
Sure.
because of the difference in just business education in some of those regions. And so that's sometimes why you see in those markets a little bit less of that initial price impact.
So
We have a
we're going into a Sunday. We're on Sunday here, and this last week we saw a lot of blood loss. The market shed a few $1 trillion in values. So my question to you is, let's run through a few scenarios based on what we've seen over this last week. Is this the market just getting startled, or is there more significant long term changes? Are we headed towards kind of a bear market? And is the bleeding going to stop? Are we headed for a really rough week based on what you're seeing so far?
Ah, so I think one of the biggest mistakes we can make is treating this like a market we can analyze because this is a self inflicted policy moment.
Right.
At the end of the day, there are only two levers that can change anything here, um, maybe three. Number one is Trump changes his mind. Number two is countries come to the negotiating table. And number three is that the markets are so negatively priced that even if these tariffs stick around, we're already at fair value. That third one, that's a hell of a lot lower than here. If
Okay.
these tariffs stick around, we have a long way to go. That would be utterly devastating to the global economy. You're talking dot com boom bust kind of cycle
Wow.
levels of pain. Um,
Doesn't Trump have a mandate to lower the interest rates and to lower inflation, Adam? Wouldn't that cause this?
No. Once again, I'll shamelessly plug another video on my channel that dives into
Please,
that.
no,
I
please.
think you watched that one. Um, there is this idea that, hey, we're bringing down the national debt, we can refinance better, and that's a fundamental misunderstanding between how rates work and how government debt works. You know, the government debt isn't like a mortgage that you just go and refinance. It's
Hmm.
issued on bonds. It has set durations. It has set interest payments that the government is obligated to make. So we can only refinance what's coming up for that front end maturity. And of that amount that's coming up for front end maturity that doesn't already come down because it was issued short term during the high inflation period, we're only looking at about $3 trillion. And the government's average rate, because they issued so much of it during the ZERP period when we had low interest rates, is only about 3.32%. So we would have to get down below 3.32% to actually be, making a positive impact here. And on that 3 trillion, if we absolutely crash out rates, we're talking about, saving $35 billion, which compared to the amount we've lost in market value and even just the capital gains tax that could have been put on that $5 trillion,
Yeah,
um, it's night and day. That $35 billion is absolutely irrelevant. So the debt doesn't get refinanced that way or negotiated that way because so much of it is locked in long duration. And if you ever tried to negotiate and refinance the long duration locked stuff, this non negotiable asset, people would lose absolute faith in the long term of the US Treasuries because you're
Sure.
trying to change the deal after the fact, that it would be far more detrimental than anything you would save as well.
Now, do countries have leverage based on the debt they hold in the U.S.? I think that's a big thing that a lot of people misunderstand is they think that, you know what, we've got all the leverage, we've got all the power. But I think what happens is, there could be a lot of reckoning to come if everyone tries to make calls on that debt sooner and that faith is lost in the U.S. dollar.
Yeah, I think the amount of debt holding um, has diversified a lot over the past decade. I don't think it's as powerful of a negotiation tool as it used to be. I also think when we're at a time when there is such a questioning of the full faith and credit and stability of the US government and their policies, most countries who hold a significant enough amount of that debt, at least nationally rather than among their people, know better than to use it as a negotiation tool here because it could be a self inflicting wound. The reason that most of these countries hold that debt is because they want the stability of the US dollar and that interest rate over time. So they don't want to have it, go off a ledge either.
Hmm, sure.
mm. We have a very close friend, and he's in the garment business in America here, so they obviously import. And he's been stressing, pulling his hair out the last week, saying, "We just worked since Trump entered office to move all of our sourcing out of China into Vietnam and Cambodia, and now we don't know what to do. What are we going to do?" And actually, I kind of floated this prediction, and he just texted me earlier today that this is what's going to look like it's going to happen. They've reached back out to their Chinese suppliers, and their Chinese suppliers have subsidies and wiggle room to say, yeah, we'll absorb at least half, if not
Yeah.
more, of that tariff. So what ended up, well, what started out being this way to get back at countries that, like, specifically, if I think of who do we tariff, it's China. Now China is ending up getting more capacity, more volume here from us. I mean, here's, I guess, my question on that. Is there a way that tariffs make sense when you talk about a country like China that, if you go back into our last 5 episodes, 6 episodes, they're all about China and all these poor business practices. Do they ever make sense, or is this just foolhardy every time you do it?
I mean, there are some ways that we've used targeted, very, very targeted and very, very limited tariffs against China to close the competition gap because the goal here is to get the prices close enough that someone can say, I can justify those few extra dollars for buying American made. We're not trying to put it on par, we're trying to close that gap in the mind of the consumer. But when you have a controlled economy, controlled currency,
Sure.
um, and a culture that is just more unified in a willingness to follow an administration,
Yeah.
that's terrible to play a game of chicken with. People always say, hey, America's the big buyer here. We're going to win out. Guys, the American consumer is the softest and most selfish consumer on the planet, right? Like, we're all a part of that. We're putting that down. We get it. Um, if our life has like the tiniest bit of pain, we will flinch first in a heartbeat. We will
Yep.
be rioting in the streets in a heartbeat. You do that in almost any other country around the world, and the amount of pain that you can inflict before the people would be up in arms is astronomical, right?
Right, right.
And so playing a game of chicken against a well-funded authoritarian government who can, keep people in line and pay these subsidies to outweight you, who can lie about their currency and the health of their economy, um, it's a non-starter. We can't full force play that tariff chicken game against China and expect to come out on top when there's so much fracturing and so much pain already in the U.S. economy.
So what measures and abilities do larger trading blocs have to kind of resist the U.S. tariffs? Because certain countries like Vietnam, who are hanging out in the wind by themselves, there might not have as much leverage. But say large trading partners like Canada, or say a large bloc of trading countries like the EU, what do they have to be able to push back against the U.S.?
Yeah, so I mean, the EU, especially along with partners in the UK and Canada, I think we're going to see some bilateral trade agreements come out of there as a strong bloc, opening up more free trade there. Canada, for example, gives an incredible amount of natural resources to the US, where the US has a first dibs and a preferable price that's often 15 to 20% below the fair market. Um, China and the EU are chomping at the bit for the rare earth minerals, for a number of the Canadian softwood lumber, all these kinds of things. They're saying, hey, we'll pay it at rate. We don't even need the discount. Just give us the right to buy it. We'll fill in the gap from the US. So I think there's a miscalculation there. And for the first time, we're seeing China proposing putting together a trade bloc with Japan and South Korea, who are when you've got Japan, South Korea, and China showing a unified front on anything, you up. That is
Yeah,
all there is to it.
right, right.
There is nothing they all agree on in unison.
Yeah,
And so the
that's
very fact that they're willing to talk about joining a united trade bloc with China and have joint responses to these tariffs is an absolute admonishment of this decision.
You couple that, right? Like we said, we started out by saying cut USAID, cut these social programs, piss off these countries in the Middle East and Africa. Now you've got China backfilling those. Then you go to the EU to threaten NATO troubles and say we're not going to protect you anymore and spend more money, guys. This is very weird. We've had multiple guests from both sides of the aisle. I'm thinking of Johnny Miller, who's a British journalist who's living in Moscow, Russian sympathetic on the war and that conflict, and he's saying, why would Europe go back to you guys? And then we have foreign policy experts talk about the Middle East and say, why would they go back? You look how you guys flip-flopped and flip-flopped. It's very interesting to see this writing on the wall. And I think when Trump came into office, one of the things we thought was going to happen was we're going to end these wars. And, he kind of had this peace through strength kind of outlook, but it wasn't supposed to be peace through blatant bull in a china shop strength, like economically. It's very, very difficult. So Adam, I'm just going to assume based on what we've heard that you're a diehard Democrat, right? Because you would hate the things that the Trump administration's doing, the MAGA policies, all of these Republicans coming in and breaking things. You have to be, right?
Not historically. I'm pretty center socially, maybe a little left socially, but a previous McCain and Romney supporter. But Trump doesn't represent any of the values that we've seen in a traditional Republican Party. It is the Trump Party, and it's the Trump game and Trump policy. Um, I think the fact is that the party has morphed entirely, and many who would have called themselves Republicans previously are too scared to talk out about the negative policies that Trump has brought to the table.
Yeah, you definitely hear some. Our friend of the show, Eric Olander, said that we're no longer an informed society, we're an influenced society. And I mean, Adam, you see it every day, right? You've been on, I remember you posted famously the 1 out of 84 tweet thread, if you remember, right? You've been around a long time. Where did we go wrong? Is it this meme economy? Is it Trump himself that's degrading it? Is it foreign powers, in your opinion, that's kind of telling us to worry about LGBT and other stuff that maybe our normal days don't matter?
I mean, yes, a lot of these things. Um, Man, there's this part of me that's so torn, and that I'm like, it's so great that everybody has a voice on the internet,
Yep.
but it's also so terrible that everybody has a voice on the internet.
Yeah.
Um,
I don't know if
uh,
I don't know if the village idiot should be given the microphone
yeah,
sometimes, you
right.
know?
Especially when we have a decline in reading comprehension and the ability to fact check things. Um, and that's a scary time, and it's opened us up to an incredible amount of foreign influence. And educational standards have tanked off. Understanding of the internet has tanked off. One of these shocking stats that really stands out to me is that the age bracket that is the most falling for online scams is Gen Z. And it's
Yep.
because they
Oh,
grew up in this era where everything was safe in the Apple Store, right? You never downloaded a virus on the family computer. You
Sure.
never had some sketchy pop-ups. You never got scammed out of your items in RuneScape. Um, those
yeah, for
formative
sure.
moments of millennials, kept them skeptical of the internet. But now, we grew up in an era where we were told, don't talk to strangers and, don't ever take a ride from a stranger. And now we call an Uber, right?
Mm.
Yep.
So we've changed electronic literacy and information literacy and given everybody a voice. And that's left us really, really ripe for manipulation. And I don't know how entirely we get that back on track, because it is a huge undertaking to rebuild trust in expertise. And I think that's one thing that is so startling to me is that, um, we saw it with COVID and medical professionals not being trusted. We see it now with the economy. I will have random people get into a fight with supply chains um, on Twitter with me, and they'll be like, I read this blog online or I saw this comment online that said this. So
Yeah.
you're wrong. And I'm like, great. I've done an academic study on that exact thing. If I'm wrong, please show me the figures, right?
Yeah.
But then they'll just be like, "Oh, you're a professor. You must be some woke liberal, and
Sure.
this is all a
A
lie."
shill.
And I'm like,
Yeah.
"Okay,
Propagandist,
cool.
etcetera.
That's where we're at." Right? So I think rebuilding some of that trust in expertise and knowing that it's okay to defer to people who are experts in certain topics could be a really valuable stepping stone to rebuilding that discourse.
And
You do run the slippery slope, though, and Mike, I'll let you answer the question or ask the question. But right then, you have that slippery slope of what we're almost seeing with Elon Musk running government as a technocracy, right? I was listening to the All In podcast today, and they kind of said, Chamath, if you were to become president, wouldn't you hire the head of industry to all these different cabinet positions? And he was like, yeah, of course, I'd take the best guy from each of these industries. And it's like, hey, wait a minute, though, that's kind of not the best way to do it either, because then you're going to have all this cronyism and other problems. So, it's definitely an interesting way to run a country, but
I
hey,
I mean, I think it's a great example of, why aren't we trusting experts in foreign aid and government budget auditing? Elon, I have my own opinions about what he is or is not an expert in, but I'm sure there's something. It is not foreign aid and it is not government budgeting, right? It is not information security, apparently, either. We should be trusting experts. And I think there's this interesting moment where we assume that just because you're really good at one thing means you are amazing at all things.
are we
Um,
seeing Dunning-Kruger syndrome just kinda manifest here? That's what it feels a little bit like to
Yeah, a
me.
little bit. And, I get accused of that a lot as well because I write across a lot of different topics. And I always argue that my specialty skill is just digesting research and teaching it really well because that's what I do a lot of.
Sure.
But there are also many, many industries that I never write about. I don't know a damn thing about sports, right? I will never talk to you about sports. I don't know much about modern sociology. I look at more historical things. These are topics I won't touch and I won't even begin to research into, and I'll defer to experts. Um, but if I'm going to write on something, I'm going to sit there and read the academic papers and talk to people who are experts in that field until I can get to a proficient level of it. Elon has this fallacy that because he is bright in something, he can just go in and instantly understand that material and execute on it in a great way. And I think that's a really dangerous thing where we've conflated financial success with success across all possible verticals.
Well, I think that's yeah. Let's touch into the USAID thing because I use your Sesame Street, Iraqi Sesame Street tweet explanation as just the microcosm of the issue at hand.
Mhm.
Is they post this list of all these programs and contracts and agencies, departments, etc. that were closing, canceling, that they're all DEI based. But when you really start looking into these things, the most transparent administration history is not very forthcoming about the details on these things that are allegedly DEI. And when we start to look into the Iraqi Sesame Street, it's not just hundreds of millions of dollars thrown away, right? It's actually trying to exert some soft power influence and kind of, impress upon these people a little bit more than just our military proficiency, but also our ability to bring some good and humanitarian efforts to the area.
Yeah, and I think beyond just an effort to, it was highly successful.
Right.
I don't remember the exact poll number off the top of my head, but I think it was something like 60% of children who had seen this show when polled called America a friend, right? And like, if you had asked that in Iraq 10 years ago, that would have been half a percent,
Right.
right? Um, Taking a generation of Iraqi children and telling them America can be a friend. We can rebuild this relationship. That is incredibly effective soft power, the likes we have never seen before. I would argue that that is an example of what might be, if you put it all down to KPIs, what might be one of our most successful USAID programs of all time.
Right. You avoid one extremist, person who flunks out of their school because they actually couldn't even get into a school, and they become this person that needs to be stopped with a $350,000 javelin missile. You already have, made the math not work.
So this
But
question's a little tongue in cheek. Why is it fraud when, these people maybe to their best efforts tried to accomplish something, possibly fell short of those goals, but when Doge, and the Office of Personnel Management fires a bunch of very important scientists working on, the tracking of the bird flu and then have to rehire them back, but that's not incompetence or misuse of funds or fraud, right? I'm just trying to figure it out, Adam. Maybe you can help me a little bit.
Hey, I don't know. I had put out a reward on Twitter. I said, here's $1,000 for anyone who in the next 24 hours can prove to me show me the proof of fraud that Elon claims he has found in the order of many, many billions and claims that the proof is already out there. If you show me something that was newly found by Doge and not by inspector generals or the OAG or anything like that, and government accountability, I'll give you $1,000, no questions asked. And I left that for 72 hours because he said he's already published it. And we got not even a single credible entry trying to claim that money.
There's
And that just speaks
screenshots of
volumes to me.
spreadsheets. Yeah,
Yeah.
it's all very shady stuff.
Yeah. The best we got was people retweeting the Doge Twitter account. And I said,
Yeah.
great. If you really found that and you can show me the proof of that, I'll give you $1,000 right now. Nothing.
yeah, I've seen a lot of mixed reporting where I think the government debt clock website has it over 120 billion in savings. Meanwhile, there's official reports that say it's been 18 billion in savings. And both of those numbers, right, take pale in comparison to where it needs to be and are not on track to where it needs to be. So it's kind of just another embarrassment, to
Is
be
this,
fair.
my favorite phrase is tripping over dollars, chasing after pennies here. What are some of the long-term effects here of trying to, go into the tiny nooks and crannies of our budget here when I feel that there's much larger line items to be addressed and that could effectively address our debt?
Yeah. Well, I noticed we haven't touched the DoD and, SpaceX grants. That's shocking. I think one of the things is that you could absolutely go in and look at nickels and dimes with a great auditing team. But going in with a machete and slashing programs that you don't understand is going to do more damage than you're ever possibly going to save. Is there inefficiency in the government? Absolutely. It's government. We know it has inefficiencies. But the reason that we're not in there with auditors is because the amount of time, cost, and damage to deal with those inefficiencies is often too much.
Right.
And the Government Accountability Office that we have and the Inspector General and Auditor Generals that we have are actually really, really good at finding anything that's at scale fraud. And that's part of the reason why Doge isn't finding it, because every year we get massive reports from government accountability of what they found and cleaned up.
I want to shift gears a little bit. I'm really grateful for all of these takes, Adam. And I know there's one other thing that we haven't talked about much, and that's Doge is named after it, cryptocurrency. So I can't help but notice this is a simple question. Your profile picture on X is a pudgy penguin. Am
Mhm.
I right about that?
Yep,
Is that
that's
what it
right.
is?
Yep.
Is that a project that you believe in?
Yeah, I love the Pudgy Penguins. I think they're a blast.
So my and forgive me if I'm wrong. I like Bitcoin. I've owned it for many years. I filed it on my taxes this year. I was just telling Mike in the pre-show, so we're making money. But I've never gotten into NFTs. Maybe thankfully. I mean, is that what it is? I don't even know what it is.
Yeah, yeah. So it's an NFT. I think the NFTs were a great trading market when it was booming. A lot of profit to be made there.
Sure.
I don't think they make a great investment. I think of them as high-end collectibles and cultural moments, right? I think what the Pudgy Penguins team is trying to do with creating a brand that's owned by the community is very interesting because when you own one of those NFTs, you own a shared IP right in that particular penguin with the company. So if they license it to sell a toy that looks like your specific NFT, you're gaining royalties there. And so it's this joint IP ownership model of can you create something that more people can be a part of, and I think that's really cool. And I like penguins, so I thought it was great. Um, is it hey invest your life savings into that kind of thing? No, absolutely not. Right?
Yeah. Justin Bieber isn't going to be buying your penguin. You
Yeah,
don't think?
maybe I don't know. I probably can't afford it. I would hold on to that for quite some time.
Right, right.
Um, but I think there are I'm in a place with my money that I can spend on something that I enjoy. I also own a bunch of very overpriced Pokemon cards that I would never recommend anybody else buy.
Sure.
But there's something that I can afford and I wanted, right? And we all have our toys. We all have our things that are not necessarily sane investments.
So thank you for correcting me because I would have thought that you might have been some sort of venture capitalist interested in this as a business prospect. I honestly didn't know, so I'm grateful for the answer there.
Well,
Um,
I suspect that you're a fan and a supporter of the Ethereum platform for similar reasons as I am. And just disclosure, I own some Ethereum too, so this is not any kind of financial advice, but I do appreciate a lot of the benefits of the platform. And correct me if I'm wrong, but I imagine you probably appreciate that the way Ethereum works because it's examples like Pudgy Penguins. It's the dApps or other programs that are built on top of the blockchain that make it so variable. It's the tokenization system. I think that's really interesting. And maybe you could kind of break that down for the laymen and women of our show who are a little less familiar with cryptocurrencies.
Yeah, I've been in crypto 10 or 11 years now. Um, for me, it was always about removing the middlemen from our system, right? We've got um, bankers and traders and lenders who often are exploitative to the extremes. We have political coercion and financial coercion, censorship of financial transactions, debanking, all these kinds of things. But if we can have these ways to make trustless digital peer to peer systems, we can remove all of that. And that was some of the original premise behind Bitcoin and then eventually Ethereum. Um, uh, 90% of the space has been co opted by people looking to make a quick buck who have no care of those original values. So you really have to sift through. You really have to spend a lot of time digging. But that stuff is still out there. And I think that's what's important is this idea of can we make digital information, whether that's finance or data or being able to say what you want, can we remove middlemen and censorship from this in a way that is safe and transparent for individuals?
Very well said. And I guess you were talking maybe about like a Trump coin or a Melania coin, one of these ones that pops up and pops down.
Yeah.
Could be a little scary. Well, actually, let me ask you this. What is your outlook? Because I've heard a little bit about it in the news. What is your outlook on stable coins and some regulation that the White House might be putting out in the coming days? I'm personally a big fan of the all in pod. I already mentioned it, but David Sachs, I know, is probably going to push a very crypto friendly agenda here. So, what have you heard and what are you looking forward to in that world?
I mean, stablecoins are one of the best wins that comes out of this industry and being able to allow this cross-border access to cash, especially the US dollar, in places that may not have a lot of that, right? Developing countries where your currency is subject to hyperinflation, where you want to be able to use the US dollar and there's no way to get the paper currency, stablecoins help solve that, and that's huge. Um, I'm glad that we're seeing a better response to things like stablecoins. We don't have to worry about them going away. I do worry that there is this conflation in the current agenda between something that is broadly pro crypto in its original values, and broadly pro crypto in a way that is regulatory capture for some of the large players or some of the investors and venture capitalists who would um, like to get their cut of the pie.
Yeah. Yeah. I am curious if there's any, in your mind, any path to return to a gold standard. I've heard that said many times in that, oh, we'll build up this stable coin and then we have this backed currency. Is that ever any kind of possibility or just too small scale?
Yeah, not no, absolutely not. The world, just like with the tariffs, it's not the 1800s anymore.
Yeah.
What worked for us then doesn't work for us now. I think the reality is I don't know if gold would hold up as the same inflation hedge if push really came to shove. Like, if we actually start talking about the end of US dollar homogeny and it all fails away, who cares if you got gold bars, right? I think the reality is in our modern economy, if we really talk about absolute de-dollarization in the world, we skip right over gold and the commodities become canned beans,
Bullets.
ammunition, and water,
I was
right?
just gonna
Yeah.
say, yeah, people can't drink and eat bars of gold, so they're not
Yeah.
gonna have much, use in the end times.
My sister-in-law is a silver collector, which is great, cool. It's a cool hobby. But she always says, if there's ever an apocalypse, I go, yeah, when you trade that for a gun, you're not going to walk away with a gun or silver. So good luck.
Yeah.
Yeah. Adam, this has been a real enlightening experience for us. Listen, it's late at night. We're going to let you get back to it, but where can people find you? I know you've plugged the YouTube.
Yeah.
Where else?
So on Twitter at Adam S. Cochran, same on Blue Sky if that's more your thing, which we now have to politically divide nowadays. YouTube is Adam on Finance is the financial stuff. Adam S. Cochran also on YouTube for random topics and nerd dives.
Beautiful, man. Well, everything is down below. We are really grateful again for hopping on here. This is almost like a Dave Portnoy emergency PSA to kind of just bring everybody up to speed on what we're seeing here. Um, yeah, so I guess on Monday, we're going to know by now when this is released. What are you thinking? We're going to have a Jim Cramer red Monday or we're going to have a little bit of a green return here?
I have no idea. And I think anybody who claims they have an
That's
idea
right.
is the person to run away from. um,
Good.
because it's all external policy. I think the only thing you can do is know that if these tariffs stay, it doesn't matter what happens on Monday because there's more pain to come.
Yeah.
And that the only resolve here is what form do these tariffs take and how long do they last, right? What percentage are we going for? And that lets you build, do you need a stagflation basket? Are you just looking at inflation? Are we looking at tariffs long term? Are we buying hoping that the markets go up because these get repealed? And I think as we get into later in this week, we can begin to piece out what will those look like. I think trying to call what happens Monday is a fool's errand at this point.
What do the futures say?
They're bouncing around. I mean, they're down, right? And
Yeah.
that's after the two bloodiest days. We're down 3% roughly. So it's not as
Yeah.
bad as it was an hour ago, but it's still not good.
Yeah, yeah. My prediction is it's gonna kind of stay flat for a couple days here while we let Trump get to chapter 3 of Art of the Deal here. So anyway,
Yeah, it'll all depend, I think, on how those margin calls pan out.
awesome.
Thanks for helping us cut through the noise, Adam.
All right, guys, thanks for having me.
Yeah, this has been Elevated Thoughts.